Hi everyone, welcome to the lesson 3, cryptocurrencies. Today we will learn blockchain and cryptocurrencies, how they are related, what are the main types of cryptocurrencies, and what's the difference between cryptocurrency and a token. What is cryptocurrency? Cryptocurrency is very similar to just the usual money that you have. It's still some assets, some numbers on your screen, but despite of the online banks, this is not owned by the bank and the currency itself is not created by the government. So you sort of take back the control. You hold it in the wallet, which you completely own, and you store the asset which is not owned purely by anyone. How does blockchain relate to cryptocurrency? You can think about it like blockchain is a technology and cryptocurrency is an application. This is basically one of the first applications on the blockchain as we know it today. How do cryptocurrencies usually enter its circulation? As we learned from Bitcoin, Bitcoin created the first block and then was developed through mining. This is one way of launching the cryptocurrency, it's called just mining. Another way is pre-mining, when cryptocurrency is launched by selling it via different cryptocurrencies. So a certain amount of cryptocurrency exists before it launches and is distributed to a certain companies or people depending on their contribution to the launch of this cryptocurrency. How does cryptocurrency supply work? It can be kept or unkept. As we spoke already about Bitcoin, which is relatively similar to gold, it's kept. So the amount of Bitcoin which can ever exist in the world is 21 million coins. And every year, basically every 4 years, the amount that we mine is less and less and less. And eventually in 100 years, we will mine all the Bitcoins which are there. Other currencies might be unkept, and it's usually balanced with the mechanism that the new coins might be created, but older coins are also being destroyed. For example, as the fees paid for transactions, they don't enter the circulation again, but they are excluded from the circulation, which makes it unkept that potentially there can be more Ethereum existing that we have now. Coin versus token. The coin is usually referred as cryptocurrency. This is a native asset on this blockchain. For example, on the Bitcoin blockchain, the native asset or coin will be Bitcoin. On Ethereum, a native coin, cryptocurrency or asset will be Ethereum. But Ethereum also has plenty of the guest assets, which are called tokens. So those are different assets, can be, for example, token on Bitcoin or token on dollar, which usually called USDT or USDC or others. Those are guest assets which exist on a main blockchain. There are 4 main types of the tokens. The first one is utility. Utility token usually gives you a certain right for a discount or for anything else that a certain company or different organization sold you as a service. The second one will be asset token. Asset token includes stable coins. Those are the tokens which are connected to a certain asset that exists in the world outside of cryptocurrency, just to represent it. Number 3, NFT, non-fungible token, might be one of the most interesting type of tokens. They usually represent something concrete and something unique. That is why NFT is quite often used to determine a piece of art or another sort of something unique. Last but not the least, security tokens. They are very similar to the company stocks. They usually give you a share of ownership in a certain protocol or certain organization and can entitle you to a voting rights and receiving the profits. Let's speak about popular cryptocurrencies, starting with Bitcoin. Bitcoin is on the market for 15 years, still being the most capitalized one. With the market cap of $1.2 trillion, it's higher than the GDP of Switzerland or Norway. There are over 10,000 of different cryptocurrencies existing today. Some of them are very similar to Bitcoin. For example, Litecoin. Litecoin was created as the silver to the gold, which is Bitcoin. It's pretty much very simple algorithm. Transactions are a bit quicker and fees are a bit lower. Different example would be Ethereum, which was created to redefine the definition of cryptocurrency and functionality of cryptocurrency. Main utility for Ethereum are smart contracts, decentralized applications, and decentralized finance. Plenty of market challengers as well, such as Tron, Solana, and Binance Smart Chain, created by bigger companies or entrepreneurs, are challenging the dominance of Ethereum, inventing new ways of consensus, streamlining some flows and flaws in Ethereum, and offering new programming languages to win the market. Stablecoins. Stablecoins are the attempt to create stable assets which exist on the blockchain. They're usually connected to gold, silver, dollar, or euro. The most popular on the markets are USDC and USDT, which are basically tokens representing real American dollars. These technologies appear to help global economy, which is running on the euro, dollar, or gold, basically to move into the blockchain rails. Meme coins. It's all started with the Dogecoin. A currency selected its logo as a Shiba Inu dog. The creator developed this cryptocurrency just to prove the point that it's meaningless and ridiculous to create one cryptocurrency after another just by cloning them. And it's ended up being just a funny cryptocurrency with the capitalization today of $17 billion. So which cryptocurrencies should you be using? Don't worry, you don't have to learn about all thousands of cryptocurrencies. In the end of the day, people mostly buy and use just the top 40 of them. So we are covering you with the top 20 to 40, just making sure that all the cryptocurrencies that are being used and are in demand can be used in your business.